What's going on for Mother's Day? What are your plans?
Oh, that's we're doing saison for dinner on Sunday. My wife booked booked the reservations herself.
Yeah. Oh, there
So
you go.
we're
Love
doing
it.
it with my mom though. So it's gonna be my sister, brother-in-law, my parents, and then
Okay.
um yeah, our family. So hopefully pretty low key. I know it's gonna be really busy, but that restaurant is busy no matter what day you go. So it's not
All
I
the
don't
time.
feel like it's gonna be much different than anything else. As long as you have a reservation, you're golden with any restaurant.
Yeah.
And just
So
expect the restaurant to be
what's
busy.
on the menu? You gonna order the caviar there? You gonna order the oysters on a half shell? What's up?
Whatever the moms want, right? That's like that
Yeah,
should be the answer.
that's a good answer. Yeah. Absolutely.
Yeah. You
Absolutely.
got stuff going on this weekend?
Yeah, thankfully, like all of our practices and sports stuff has been wisely moved to Saturday.
Okay.
And so Sunday will be Mother's Day with our immediate family. And my mother-in-law, my mom passed away a few years ago, so I'll probably drop some flowers off for her early in the morning, and then we'll go over to the golf club for the traditional Mother's Day brunch Sunday morning. So that will be the plans. And then I think my wife just wants to hang out, just wants to chill out.
We
So that's
did do last year. We went with our neighbors to they have like a strawberry picking thing that goes on.
oh, that's cool.
And so we did that last year, and he asked me if we wanted to do it this year. So I'll run it by Linda. I can see her totally saying, no, I'm just gonna kick back and stay at home and do nothing. But the fact that she did do it last year, she could easily go in that direction as well. So we'll see.
Yeah,
It's up
yeah.
to
Well,
her.
that's exactly right. Right answer. It's up to her. It's up to her. All right. Well, with the Mother's Day stuff all sorted out, let's kick this into gear. I have one question though before we begin. You work out fairly regularly, would you say?
Yes.
Do you listen to music when you work out?
I don't
Oh,
because
you're a serial killer.
no, because I go to a class. You can't wear earphones
Okay.
in the
All
class.
right. All right.
If I'm working out at home, it's usually like a quick 15-minute,
Do you still have the
something.
water rower?
I still have it. I don't use it.
Okay. All right.
I'm honest about. I have another piece of equipment that I bought like probably 4 or 5 years ago, and I still use that. So I'm proud of myself for that purchase.
What's the equipment?
It's like a more industrial resistant band. Like it's a like different, really solid strength, and it's a solid strength bar. So your tension on it's really high. It's really high quality.
Oh, so
I
are you
use
doing pull-ups on it? Oh no, it's a resistance band with
resistance. So you can
bar.
do
All
you can
right.
do squats. You can do
Yep.
raises above the head for your shoulders. You could do
Yep.
bicep curls. You could do a bunch of different. You can do triceps. And so it's like a really high quality one. And I've
Yep.
used it for 4 years, like pretty consistently, but that's pretty much limited to like a 15-20 minute workout,
Sure.
which, I feel like at that point, I don't really need to rock the music to like get
Oh,
through
so you're
15 to
still
20
not
minutes.
listening to no earbuds, no nothing. You
No, you usually know,
just
like,
raw, you doing curls with no music and
no,
push-ups with no
I did
music.
the bike. I did the bike for like 6 weeks to start the year because I was like all gung ho, right? And
Yeah.
I would listen or watch something at that point because to me, that monotonous riding a bike, I
What
needed
bike?
time to hurry up and pass by.
Like a
Um,
Peloton bike?
like no, we have a stationary bike
Oh,
that
okay.
we ride, and so I'd ride it for like 30 to 40 minutes, and I need time to like go by. So like I need to keep my
Yeah.
mind
Sure.
thinking or listening to something to get things moving. But yeah, now because I don't ride the bike, I don't listen to anything.
Okay. All right. All right.
Yeah.
I was just curious because my question was going to be, oh, well, you work out. What do you listen to? What's on your workout playlist? But you don't have a workout playlist. So I guess with that out of the way, maybe we'll just jump right into
I
what's
do
going
have
on.
a quick question for you though. Do
Yeah. What's up?
okay? So you listen to music then when you
I
work
do.
out?
Yep. Yeah.
Do
When I'm
you
not
find
working out with
yourself
somebody.
listening to as much music now, or has it shrunk down a lot because you end up listening to podcasts? It's in space, like
So
instead of the music, you end up listening to something else
it's
because it's there
changed.
now.
It's changed over time. I used to do a lot of steady state cardio. So it'd be like run on the treadmill for 20 minutes, be on elliptical for 35 minutes. And on there, I would just go to the pain cave and like listen to a podcast and like escape. But now I do a lot less of that. If I'm doing cardio, it's on the Peloton. I still do the Peloton. You know, I've had it. I know it's had its ups and downs, and COVID and not COVID. This is not a recommendation to buy or sell, but like their stock price has gotten buried and there's always a takeover rumor. I still like my Peloton bike. And so, you know, music plays on that, but otherwise, like I'm lifting weights. And so I'm listening to music when I lift weights. Usually I'm not listening to a podcast if I'm lifting weights. So the playlist changes sometimes from rock to rap or whatever. I'm finding mostly it's stuff from 30 years ago, because for some of us, our musical tastes don't change after high school and college, which I think is maybe the case for me. So yeah, I'll listen to music. I'm not, unless and I don't anymore, but if I'm banging out 30 minutes on treadmill, podcast, absolutely. If I'm lifting weights, no, it's gotta be music. I gotta get pumped.
Hard rock,
and some rap mixed in there, hip hop, rap, whatever gets the blood pumping, whatever gets you excited for your next set. That's really all that matters. Okay, let's talk markets, because I don't think we didn't post last week, and so we haven't talked about what a lousy April we had, but we can talk about how good of a May we're having. So let's rewind a little bit. Right here, we're looking at, this is, as we're recording today, this is the last 5 days of all the major indices. Boy, S&P 500 and Russell are really popping today. But let's just go back. Here is quarter to date through the, we're recording this kind of midweek on the week of the 6th. This is showing, where we were essentially at the end of March and then April, and then now we're coming back up. So on the quarter, the S&P 500 through the end of today, where we're recording this on the 9th, is almost break even for the quarter, which is great, because if we pull this thing back year to date, boy, S&P 500 is pushing, almost 10%. Yeah, and we talked last time about, the first week of April, where it was worried about jobs report. Second week of April, worries about inflation data. Third week of April, worried about what the Federal Reserve was saying. But it might have also been people selling to pay their taxes or something, right?
Well, we mentioned too, we were off to a sprint the first few months. You're for some one reason or another, the market's going to find a reason to have some kind of relief.
It's got to
maybe that was April.
Absolutely. So here we are, month to date. Russell is doing the best, up 5%. Dow up more than 4%. S&P up more than 4%. Nasdaq, 3.75, almost 4. So we still have a long way to go in May. It looked like the sell in May and go away kind of mantra is simply just there because it rhymes, because it's not bearing itself out this year, and I think it probably doesn't most years. So all the worries about inflation, it's almost like everybody's gotten used to 5% rates. And as soon as the Federal Reserve said that they weren't going to raise rates, that was enough of a relief rally to begin the month that we were off and rolling.
Yeah, the nice thing here too is it's not like a large disparity between these stock indices. Sometimes I think recently, a lot of times you would actually see markets doing pretty well, minus, small caps aren't participating in the rally.
Yep.
So right now, seeing things kind of all go up, much more of a larger breadth of the stock market is nice, where it's not just, again, as we talked about before, the large tech stocks doing well and everything else is kind of lagging behind.
Yeah. Interesting here. Once I just clicked the small caps out of here. Dow is the top performer of the three major indices here on the month. It seems like maybe we're getting a little bit of rotation into value, perhaps. I don't know. Those tech's done great, but good gravy. Like, some of those valuations are nuts, especially over these last few months. Anyway, it'll be interesting to see where we go. I think May can prove itself to be a decent month. And we are still, with every day that passes, we are getting closer to the Fed potentially cutting rates. I still think we're going to end the year at 5% Fed fund rate, and they're going to do it.
Well, every day we move on, we get closer. We just don't know when that day is coming.
Exactly. The question is, are we closer because the Federal Reserve is worried about being too tight? Are we moving closer to Fed rate cuts because the economy is starting to stumble?
Yeah.
I
It's
think
going to happen. It's just a matter of when. We just
so.
don't know
Yeah,
when
I would
that
say
goalpost is finally planted, and we actually
yeah.
actually see that day happen.
Keep an eye on that unemployment rate cresting north of, or not cresting, but moving north of 4%. I think that's going to tell us that things are moving in the direction that could be a little bit shaky. Well, when things get shaky, well, things have been good, and we're talking about rate cuts, and a lot of people have been. We're talking cash today, and whether cash is king, but it's not a long-term investment, is it? And a lot of us advisors and a lot of our clients and a lot of everybody have been putting
Piling into cash.
buying in
Yeah,
cash.
finding interest that they can earn with their cash.
Yeah, and it's certainly still not in your savings account at the bank. It's mostly CDs, treasuries, and money market funds. And our first chart here today is talking about money market funds and interest rates. And so if you're looking here, the blue chart is showing total assets in money market funds, and it's up to $6 trillion, more than the global financial crisis, more than the pandemic. You can see that money markets spike when things are getting dicey, but I would say they're spiking now, not because they're dicey, but because you can get 5% on, or more than 5% on your run of the mill money market fund.
Yeah, my takeaway from this chart is actually kind of two things. I mean, when you're looking at the yellow line, which is the rates that you could get on the 1 month treasury, you obviously see that on the left hand side of the chart, interest rates were going up and we're paying a respectable amount of interest. Then we went completely back to the kind of the ZERP era, and
Yep.
the area where most people were familiar with, the 2010s, not paying any interest. And then you go to the right side of the chart, and the interest rates are back up again, right? It's interesting to see. You definitely see, which would make sense. Fund flows into money market funds are going to come when interest rates are high and they're paying you something. People move their money, and that's kind of what you see. These money market funds start to get large inflows once interest rates are moving upwards and getting to a respectable rate. One interesting thing I see was when interest rates actually came down in 2010s. People ended up keeping a lot of the money still, and so the money it dropped. The flows dropped, but people kept their money in the money market funds, probably just out of laziness. To be honest with you, it was there. What else are you going to do with it? You're going to move it to the bank.
Man.
The bank is not going to earn interest.
There's some fear because it wasn't. We were coming out of the global financial crisis, but we're talking about W-shaped recoveries. We're talking about double dip recessions. Was the real word? Greece and the rest of Europe was going bankrupt. U.S. credit rating was downgraded. I mean, there was some really wild stuff going on as in the years coming out, 10, 11, 12. Now, once we get into 2015, it's hard to explain. I think what's also interesting, and I mean, tell me if you think I'm right or wrong, but you go back to 2005 and rates, the 1 month treasury was up about as high as it is now, right? That's one of the things that helped pop the housing bubble, but no money was in money market funds. And I'm wondering if there isn't a demographic element here, because if you're 55 in 2005, you've got no interest in money market funds, market's ripping, you've got decades to go. But now that same person is 75.
Right.
And they're saying, I don't need to be as invested. I'm taking money out to help supplement Social Security and make ends meet in retirement. And 5% on my cash sounds pretty good. And I don't need to do anything more than that. So there could be a demographic.
With the clients that you've been talking to over the last year and a half or so, in terms of people that have moved money into money market funds and CDs, where are they moving it from? Have you found that people have taken risk off the table to say, hey, I'm okay with de-risking and putting money into a money market fund because it's paying great?
No, is the short answer. So you've disproven my theory, at least anecdotally here, which I can appreciate. No, everybody's saying, I'm sitting on a whole bunch of cash and I'm getting 2 nickels for it at whatever bank I bank at. I'm going to take out whatever I'm comfortable, everything except what I'm comfortable leaving. So let's just say, use round numbers. They have $100,000 in savings. They're going to leave 20 behind and put 80 in a money market fund. That money so that's where I take a little bit issue sometimes with people saying, oh, look at all this money and look at all this cash on the sideline in money market. The minute rates start to drop, that's going to go get invested. No, it's not necessarily. I mean,
Right.
maybe,
I'm
but
I'm 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 in agreement with that. Clients move the money from most of my clients, almost all of my clients
yep,
have moved their money from a bank account into a money market fund or CD.
yep,
I don't think that they're willing to say, a year from now, 2 years from now, when interest rates have fallen and they are looking to do something, that they're going to say, yeah, let's just go throw that money that I once had in the bank account, very safe money,
yep.
into the stock market and to start taking risk with it. I'm not
No,
saying that some people won't. I'm just saying the majority, I don't think are going to go in that
yeah,
direction.
I agree with your prediction here. I think if anything, if rates start to fall and these money market funds go from paying 5% to 3%, as we start to see that go down, some people might look at this and say, this is still rainy day money. But if rates are falling on these money market funds, then I'm going to go ahead and lock these higher rates in and buy a 1 year, 2 year, 3 year CD and make 4.5% for 3 years or 4%, whatever the rates are. I don't know what it is on a 3 year CD right now, but let's say it's 4%. Well, if you're starting to see money market funds go from 5.1 to 5 to 4.9 to 4.8, you start saying, oh, okay, the trend is clear here. I mean, if you're savvy, the trend is clear here. I'm going to go ahead and lock these rates in because this is never going to be invested assets. I don't know.
Yeah, I tend to think that you'll see, and just the money market funds, you'll see some of the money leave like it naturally would when interest rates drop, but
Sure.
then you're going to have a lot of it just be kind of sticky and stay there.
Yep. Well, and here's the problem. Here's the problem with cash. You have to earn something on cash. And so if you are one of the people who hasn't done this, you can take a look and see you not only your rates aren't as good as what you think they are because inflation is going to erode this. And so what you can see here is this is interest income on cash. So if you invested $100,000 in a 6-month CD, your interest income is pretty good, even going back all the way to 1990. But your real income is much less than that because you're not factoring in the fact that inflation is dragging things. And so over the course of, gosh, what is this? 35 years, a 6-month CD would have actually lost you money if you account for inflation dragging on the yield.
Yeah, yeah. I think people tend to really well, I think the average person tends to discount inflation, right? Like up until more recently, where it's been in the press, like in the 2010s, I think people just thought of it as, oh, I have money, I want to keep it safe,
Yep.
right? I'm going to keep it at the bank, and they're not thinking of the implications that really their money's being eroded because they're not making anything in that bank account, but yet inflation is kind of still chugging along, even though it was a reasonable number, it was still hurting them, especially over about a decade time period, right?
Sure.
Like and so they were actually losing purchasing power, but that wasn't the worry that they had until more recently.
Yeah, and I suppose you're offsetting it also. I don't know. I think where this really comes home to roost is for a big period from 2010 to 2020. If you weren't earning anything on cash, it's okay because inflation was nothing. But now you really do have to get interest on your money, and the bank's not doing that for you. So you have to take it into your own hands to go find some yield. High yield savings account, money market CD, treasury, whatever you're doing, you can't earn 0.25% on your cash anymore. Unless you need
But it's there. That's the whole reason why today's a much different environment because
Sure.
inflation is high, so you do need to be active, but you do actually have a plan of action that you can take, which is there are accounts that are going to pay you high interest. In the 2010s, even if inflation was bothering you, let's just say even at say 2%, and that was bothering you that your money was eroding, what were your options without taking a lot more significant risk?
That's the
It
old
wasn't
Tina
it.
trade, right?
What?
That's the old Tina trade. There is no alternative. If you want to get return on your money, on return on your investments, you have to invest it. There's no cash equivalent, and now there is. Well, you know what does beat inflation, Ryan? Stocks and bonds. So this next chart we're looking at, this is the growth of it. Okay. I don't love this chart only because it goes back to 1926. And like lots of things are the same, lots of things are different. But this is S&P composite total returns, 10-year treasury bond, and inflation. And going back, if you invested $1 or if you had $1 at the beginning, and since since 1926. So we are going almost 100 years back. $1 would be 15,000 now. I actually think it would be more than that with the S&P 500 or S&P Composite, because it wasn't 500 a while back.
Right.
The Treasury bond would be, your $1 would be 106. I think that's what it is.
Inflation has made $1 into $17.
Yeah, whatever cost you, and so your dollar wouldn't have grown. It would still be $1, but now you need $17 to buy $1 worth of stuff. So you have to think about the inflation in the upside down, right?
Yeah, things are 17 times more expensive, or you could kind of think of it that way too. And so, how would you have kept up in all of these decades with inflation that's gone up 17 times over this long, almost 100-year time span?
Yeah. I think that it always comes back to is when I'm talking with clients about, should I put this in money market? What is the money for? What are we investing for? Earmark it. Like, put a sticky note. This money is for buying a car in 2 years. Oh, well, if you're going to buy a car in 2 years, shove it into a cash equivalent, get an investment, get some interest on it instead of zero, because a car is going to cost more in 2 years. And there you go. Oh, you're not going to need this for a decade and a half. Okay, well, that changes things a little bit. Maybe we invest this money. That's really what should drive this, I think.
Yeah, I think the conversations are important to point to people to try to at least have the discussion or push them towards not having a stockpile of cash at their bank account, right? Like, I think some clients are just, they think more is better in a bank account, even when it was earning 0% interest rate.
Yeah.
And then obviously, as interest rates have crept up, they almost become used to having a lot in their bank. And, it's that feeling of, well, I like to have a lot in my bank. But again, it's not being efficient, right? If you can earn something somewhere else and you're not earning something right now, you shouldn't be keeping a large pile of money in something that's not making you anything.
Right. And you don't have to maximize. You don't need to take everything in savings, but you do need to optimize. So take what leave 3 months of expenses in your savings account with that, whatever that is. Let's say that's $20,000. Anything above that should be earning some interest for you. And like, money market funds are liquid.
Right. That's the beauty. That's the beauty of them, is that you can, buy it one day. You need to buy something to repair your house. A month from now, you can get access to it quickly, and so at least, again, you're earning interest that's respectable on money that has been sitting there forever, not earning anything.
Totally. Yep. What's on your mind this week other than Mother's Day?
So I talked to you a little bit about this. It's interesting. Like, you go to these sporting events for your kids, right? And
yes,
you hear about this all the time. The spectrum of sports parents, right? And so yesterday, my son had a tennis match, a middle school tennis match, and he wasn't playing yet. So I was watching some of the girls' singles play, and the parents next to us scream at, this is the opposing player's daughter. Parents scream out, "Call the ball out or get glasses." She wasn't calling some of the balls that seemed like from their perspective were out. So they yell that out, right? And you're just, you get across in your mind. You're like, geez, why, you have these parents, obviously, some of them don't control their emotions. Some of them are, not thinking, whatever it may be. But it was funny because during the crossover, the daughter comes up to the gate, the mom comes up to the gate, and you can clearly tell that the daughter scolded her mom because her mom turned around and kind of went back to her seat without saying anything. And so, it's just, it's funny that we're all over the place. I get it. It's emotional. It's, it's nerve wracking. I ran into one of the other parents, and she was sitting just on the ground, quiet as can be. She's a nervous wreck. She goes out there to support her son, but I don't know that she probably doesn't enjoy it because she's such a nervous wreck watching, so there's all kinds of parents out there, and it's just an interesting process to see.
It's hard watching your kids play sports.
It is.
It's just, oh man, it's tough because you want them to do well so they can feel good about themselves. When they hit some adversity, you're really rooting for them to overcome that adversity because that's character building. You want them to enjoy it so they continue playing, right? Because it's healthy to be outside, and
But the one thing I think you have to avoid is from embarrassing your child out there, right? And that's kind of what happened in that one instance yesterday was, screaming something that everyone can hear. And in a kind of a derogatory term, right? Like get glasses. Like if you can't call them out, it's like
let's just call it what it is. That's poor sportsmanship, and it's coming from someone who should know better.
Right.
That's full stop. It's a bad example. It's a bad look. Thankfully, that her daughter, thankfully her daughter does know sportsmanship and was able to explain to her mom that she wasn't being a good example out there. Man, that's tough.
Yeah,
that's tough. I don't really know. So what I've got on my mind this week, I guess, in the vein of kids sports. Not that people watch this to listen to our kids sports, but I found that my kids are playing exclusively the sports that I played.
Shocking.
Yeah, I know. I didn't intend it to happen. It just happened, So I played I played tennis and volleyball in high school, and Henry is definitely into tennis. He's playing golf. I didn't take golf up until college, but he's playing golf and tennis, and he loves tennis. That's the one he likes the most. Lily plays tennis, and she is into volleyball. And then there's this new big volleyball academy, and we got her signed up got months ago now, and she from day one loved it. We play in the front yard, and as much as I was searching for a team sport, you have two boys, so it's trickier with girls. You don't have as many. I mean, you do have some options, but there's no girls flag football league.
Sure.
And the softball is there, maybe not quite what baseball is. There were two basketball leagues that our kids played in. And, Henry was in the boys and Lily was in the girls. The girls had half the teams. It was in a smaller gym at Bullard, where the boys, they would turn out the lights and do this WWE introduction for the boys. Meanwhile, Lily's like, what is this? This is garbage. We don't get this. They're in this little ratty gym with it's freezing. And so it's cool because volleyball for these girls is absolutely top billing. The facilities are awesome. The coaching, the other girls that coach are fantastic.
Where is this at?
It's Valley Athletics Academy. It's down on Dakota across from the airport. They have a Valley. And so underneath that umbrella is a Valley Volleyball Academy, and there's a Valley Basketball Academy where they do AAU basketball and some other stuff. It's owned by Vance Wahlberg, the former Clovis West coach, now Fresno State Bulldog coach. And his son played basketball and volleyball.
Okay.
That's what tall people do, right? Play basketball and volleyball.
For sure.
And so that's why they're doing this. And one of the, I think it's under 16, maybe under 18 girls teams actually won the national championship for club volleyball here just recently over there.
Who's coaching the girls?
I don't remember the name.
Not person, but are these ex-college athletes, ex-high school athletes?
Yeah, at both.
Okay.
Like I would say, accomplished coaches, right, who have coached at the junior high and high school level, and maybe some collegiate.
Yeah.
And then ex-high school players. I saw somebody who's my age that played girls volleyball when I was playing boys volleyball in high school, and has stayed playing volleyball this whole time. She played collegiately. So some good pedigree there. I don't know. It's a lot of fun. It's a lot of fun to have something that my daughter loves. That's a team sport. That's, it's because team sports is all about tennis is great. Golf is great, but it's a lot of pressure because it's all you.
Yes.
You're not accountable to teammates and having to run a game plan and play. And I think team sports turns into more real world stuff because you have to go to an office when you grow up,
work with people,
work with other people.
Yeah. Communication and understanding people.
Yeah. And have a boss and be I don't know, it just translates. And so I really, really wanted that for Lily and had trouble finding it until this point. And we found it with volleyball, and I couldn't be happier.
That's awesome.
And it feels good to be back in the gym too, for me.
Yeah. Well, it's relatable to you, right? Like it's easier as a parent to have a sport that you can relate to, and when you're watching and you can explain and you can tell some of the nuances versus like when my kid was doing swimming, like I barely can hold myself in water right
Yeah,
now.
yeah. Here's how you
I
doggy
can't give him
paddle,
any
kid.
guidance whatsoever to how to do a stroke correctly.
No.
So I'm no use. But on the tennis court, I can actually give some pointers and tell them what to
Yeah.
do. So
For swimming, it's like if you're moving forward, your stroke is good, right?
yeah, right, right.
Yeah, no, I know we're both wrong on that. All right, well, let's leave it there. I think this is a good one. If what I didn't do is say, if you have questions about what we've talked about today, you can email us at info@forwardfg.com. We have, if you were a client and you missed our seminar with the mayor, which was awesome. I wish we had led with this. We should have led with this. It was awesome, but we've got a replay for clients. So email us at info, talk to your advisor, email us at info@forwardfg.com. So you can catch the replay if you did miss it. It was such a thorough rundown of the challenges facing Fresno and the area. And
It's good to hear, what some of the issues are, what they're working on presently, like what they've been able to succeed with.
Yep.
And
What's
then
working, what's not working.
Even things that like people had questions on, potholes,
And the mayor,
right? Potholes, which is, it seems pretty inconsequential, but it does, something that is on people's minds. And he answered the questions in terms of, what's going to take to get these things dealt with.
Yeah. And Ryan, straight answers.
Right.
You could get this political word salad from some elected officials where they're talking platitudes and don't really answer the question. You just kind of gloss things over. He talked about how he wasn't in favor of high-speed rail originally and changed his mind. You don't get that. You don't get that from people. You don't get that from elected officials. He was an absolute straight shooter and kind of trying out his State of the City address on us as a warm-up act.
Sure.
It's like a stand-up comedian going and doing his act in the clubs before he does his Netflix special.
Yeah.
That's kind of what we got, but it was a really, really refreshing discussion. So if you're interested in the replay, hit us up for that. If you haven't already, subscribe to the YouTube channel. If you're watching this on YouTube, if you're listening to this on one of the podcast outlets, you subscribe to us, Apple Podcasts, Spotify, and so on and so on and so on. Ryan, let's do this again in a week or two.
Sounds good. Talk to you soon.
All right. Until then.